The new chair of the Fed made his announcement yesterday and said that we're holding rates steady. But in his very brief talk about things, he said that taking rates up is not off the table. Well, that sent a few people into a frenzy. Bonds went up, rates went up on the mortgage side of things, and the stock market didn't know how to quite to react to it. So we saw a little bit of losses yesterday off of our highest gains ever, right? The top price that we've ever seen in the Dow, the S&P, the NASDAQ, everybody's at records, and it dropped down a little bit. Today, some of it's come back. We see that bond yields have actually gone down. Mortgage rates are feeling pressure and dropping back down again. So what is all this actually saying? It's just saying that the Fed is on top of things when it comes to inflation and making sure that our inflation rates don't go skyrocketing again. But with the news of an agreement with Iran and some of the other elements of inflation, especially fuel costs, and therefore everything that's shipped potentially going down, we may see some light at the end of the tunnel here. That said, it basically, what the Fed chair is saying is, hey, I'm not going to just subdue the pressure and do what one person, one group, one industry wants me to do. I'm going to do what's best for everybody. Ultimately, that's a good thing. And that also means we may be waiting a little bit longer for rates to come down. But as I've mentioned in the past, our rates right now are somewhat normal. Now, home prices have increased, and therefore the rates and the home prices, and again, what we can't unsee, which were 2.5%, 3% rates, well, those are things that we have to accept were an anomaly, and we've got somewhat of a new normal. I do see rates coming down in the future. It still may take several months, possibly even as long as a year, for us to really start seeing some rate reprieve. But as we start seeing inflation stabilize, which frankly is the job of the Fed, is to look at all those things and turn those dials and pull those levers to make sure things are right, then we will start seeing some benefits to us overall. One thing that I still always like to mention is I deal with people on a pretty regular basis, and one of the questions I have is, hey, out of curiosity, do you carry any current credit card debt? And a lot of people say yes to that. And some of them don't have the ability to pay it off. Some of them, a good friend of mine, as a matter of fact, had enough money in the bank to pay off all of his credit cards, and he said, well, I want to keep the money as reserves. And I appreciate that whole rainy day fund, but not at an expense of 22 or 24%. If you paid that off, could you use those credit cards again for a rainy day fund? Again, I'm not saying leave yourself cash poor, but really think about how you're utilizing your money. And in his case, he was spending over $1,000 a month in interest. Well, if you add that to somebody's monthly overhead expense per